Good afternoon and welcome to the Market Crop Production and WASDE briefings. My name is Lance Honig and I serve as chair of the Agricultural Statistics Board at NASS. This briefing is for the Secretary of Agriculture and other policymakers at USDA to better understand the content and context of today's reports. We're very pleased to have Dr. Seth Meyer, USDA's chief economist, joining us as Secretary Designate today. We also welcome Dr. Cindy Nickerson, USDA's deputy chief economist. Dr. Meyer, I'd also like to share that we have some visitors with us today. We've got folks from the National Corn Growers Association, specifically Illinois, Michigan, and Wisconsin, I believe. And then we've also got some staff from the American Farm Bureau Federation joining us. So welcome. Everybody should be on this side of the room. So thank you all for joining us today. Before I turn things over to our presenters, I do have a few notes for our live streaming audience. The crop production and WASDE reports are considered principal federal economic indicator reports. The Office of Management and Budget provides specific guidance on how these important reports are to be released. OMB statistical policy instructs policymaking officials to refrain from making public comment regarding the content of these reports within 30 minutes of their release. Therefore, we will not be taking questions from the public during this briefing. Both NASS and World Board staff are available for phone and email questions, and NASS will host a social media event at 1 o'clock Eastern Time today. We strive to have everything presented at this briefing match the official record. However, should there be any discrepancy, always refer to the official published estimate. With that, I'll turn things over to Patrick Boyle, Chief of the NASS Crops Branch. Patrick will be immediately followed by Dr. Mark Bekanowski, Chair of the World Ag Council. Patrick.
All right, thank you, Lance. Good morning, everyone. Or good afternoon, I guess. Thank you for being here today. Welcome to those joining on the live stream as well. I've only got a handful of commodities in today's reports, so my portion of the presentation will move along rather quickly. Before we dig into the numbers, as we normally do, I'd like to highlight a few of the data sources that were used as we put these reports together. You can see in green, as part of our objective measurement programs, our trained enumerators took counts and measurements from more than 800 citrus groves in Florida in mid-February. You can see a little lower, just below that, we also looked at weekly utilization data from the Florida Citrus Administrative Committee, and that includes information on boxes packed or processed. So now we'll jump into the data, starting off with citrus. All orange production is down 1.3% from our previous forecast and 12.2% compared to last season. Non-Valencia oranges up 0.2% compared to February, but down 3.7% from last season. Valencia varieties are down 5.4% from last month and down 30% compared to last year. Grapefruit production is forecast at 299,000 tons. That's up 1.4% from the last forecast, but down 13.1% from last season. Lemons are unchanged from the last forecast, and that's up 7.9% compared to last season. Finally, tangerine production at just over 1 million tons is unchanged from the last month and down 9% from last season. Moving over to field crops, just the one today, sugarcane. Harvested acreage at 920,000 acres. That's up slightly from our previous forecast. Moving over to yield, 37.4 tons per acre is down 0.3% from last month, but up 3% compared to last season. That results in total production of 34.4 million tons, which is down less than 1% from last month, but up 1.8% from last year. And as I mentioned earlier, I just have a couple of commodities in today's report. So before I hand things over to Mark, just a quick look at a few of our upcoming reports. You can see we've got a number of reports between now and the end of the month. That includes our annual price reactions report, cattle on feed, hogs, and the 2022 Census of Agriculture summary for the U.S. Virgin Islands. On the 31st, we'll have prospective plantings and grain stocks reports, as well as our ag prices report. And then looking ahead at April, CARE reports on the 1st and an annual update to our historic track records document on the 9th. And then At the bottom there, we'll be right back here again on the 10th of April for another crop production update. As Lance mentioned, just a quick reminder, we will have a stat chat session on X following today's briefing, where we'll take questions and share additional information on today's reports. So as always, the full reports are available on our website, and that concludes my portion of today's briefing. So I'll hand it over to Dr. Jekanowski from the World Ag Outlook Board.
Thank you, Patrick. Record fast briefing. Barely had time to finish putting my presentation together. So I'm going to go walk through the WASDE for all of you. Just a little bit of background. So as you can imagine, I mean, March is usually a pretty straightforward month for us. Don't get any new information from NASS that goes into the balance sheet. Oftentimes focus on the southern hemisphere. This year had a few additional things to think about. 25% tariffs on Mexico and Canada were announced, and so we were planning for those. Then they were suspended. Suspended on products covered by the USMCA, and it's easy to forget that there are still some products that are not covered by USMCA, for which those tariffs would remain in place. For example, live hogs and pork, and rye and oats, and a few other minor ones. So keep that in mind. Even though the tariffs were suspended, we still had a little bit of work and thinking to do along the way. Other point I would make, just in terms of the briefing that we'll talk about, Australia's wheat crop, better than expected yields, raised wheat production to its third highest on record. All right, so let's go ahead and go through commodity by commodity here, starting with global wheat production. Up this month, raised 3.4 million tons, country by country. So Argentina raised at 800,000. That is based on data from the Ministry of Agriculture. Australia, we'll talk about, have a few slides on that, basically harvest results, third largest crop on record. Russia raised a bit, that's the final data from Rostat. Higher spring wheat production more than offset lower winter wheat production. And then we also raised Ukraine based on information from the Post reflecting some official data from Ukraine. So real quick, I'm going to walk you through the Australia wheat production forecast. This is just a map of Australia showing you the major wheat producing areas of the country. As you can see there, most of the wheat, Western Australia is the state that accounts for the majority of wheat produced there. Western Australia plus New South Wales, which is that state, they combine to account for about 65% of production. And then we have moderate amounts also in Victoria and Southern Australia, a little bit in Queensland as well. So kind of going through the crop production year, pre-planting conditions started out relatively dry in the west, especially in the west. Decent moisture in the east and dry in Southern Australia and Victoria. Moving into the planting period. Again, in early season, beneficial rains continued into the eastern part of Australia, and started to get some more beneficial rains in Western Australia as well. Continued to be dry in the south and in Victoria. And then finally, toward the end of the growing season into the reproduction phase, much better rainfall in the Western Australia. A little bit less in the east, but again, they had the beneficial rainfall earlier in the season. Southeast Australia remained dry really throughout the growing season. But one of the things that really benefited the crop this year, despite some dryness in different parts of the country, is temperatures were fairly mild, relatively benign, not very hot, just about average throughout the season. So no real extreme heat that would have damaged the crop. And with that, so it turned out to be a much better yields, much better production year than expected. Production was raised about 7% from last month, and year over year, it's up 26% from last year. So a big crop in Australia, third largest on record. There we are. In terms of the global wheat supply and use balance sheet, a few things I'll walk you through here. Beginning stocks are up a bit. That just reflects some back year revisions to Turkey. Basically lowered Turkey's FSI estimate, which raised their stocks. And going back a few years, back to 2019, 2020, and the result is a little bit higher carry-in coming into the new crop year. Feed use up 1.3 million tons. That is higher feed use in Australia, reflecting the larger crop there. Higher feed use in the EU, where we also reduced their exports, so they're consuming more within the EU, feeding more, and higher feed use in Thailand as well, based on increased imports there. Trade, so global trade, exports from the EU were reduced 1 million tons this month. Russia down 500,000 tons. US was down as well. We'll talk about that on the next slide. Partially offset by higher exports out of Australia, reflecting that big crop that I just talked about. Australia exports were raised 1 million tons. Also worth noting, so that's exports. On the import side, just to point out, we lowered China's imports 1.5 million tons this month, down to 6.5 million tons, and that's down less than half of last year's total. Last year, China imported 13.6 million tons. Ending stocks up, that's higher stocks in Turkey, Argentina, US, Australia, and Russia. In terms of the US wheat balance sheet, all of the adjustments we made this month were exports and imports, so trade changes. Raised our import forecast. That's hard red spring and durum. Increased pace of those imports, primarily, of course, from Canada. And in exports, lowered 15 million bushels. Based on just pace to date and some revisions in the second quarter, export forecasts. So with higher imports, lower exports, ending stocks up 25 million bushels. And we also lowered our season average price, 5 cents per bushel, down to $5.50. And at this time of year, over 80% of that crop is marketed. Rice production, global rice production, not much to talk about here. World rice production still a record, virtually unchanged production forecasts this month for all of the major producing countries. And similarly, in terms of the global rice balance sheet, really negligible changes. No big headline stories to talk about here in terms of the global rice supply and demand estimates this month. US rice balance sheet, we did make some important changes again here, focused on imports and exports. Raised our import forecast another million hundredweight. Continue to raise that forecast as we're seeing stronger imports, consistently strong imports, primarily from India and Thailand. That's fragrant rices, jasmine and basmati. So strong imports. Exports, we also raised this month. That is some recent strength in medium short grain rice exports driving that increase. Higher imports, offset by higher exports, leaving ending stocks unchanged. Season average market price, we raised 20 cents per hundredweight, just reflecting some really strong prices reported for January for both the long grain and southern medium short. So we increased our price forecast to reflect that. Let's move into corn, global corn production. Put up the back year, 2023, 2024 production forecasts here as well. Raised Argentina's corn production and lowered Brazil's back year corn production, all based on observed utilization within those two countries. So strong exports out of Argentina, suggesting that that crop was larger than we had forecasted, and some relative weakness in exports, but and ethanol production in Brazil, suggesting that crop was smaller than expected, and now we're a little bit closer in line with WAOB. So that's the back year corn production. Looking at the current year, 2024, 2025, Mexico. We reduced 400,000 tons. That is based on lower yields for the irrigated winter crop. The current irrigated winter crop, which was partially offset by higher area for the summer crop. And Ukraine and Russia raised corn production raised there based on the latest data harvest results. South Africa corn production reduced 1 million tons this month. That is based on official data from the Commodity Estimates Committee, and that is lower area for South Africa. And India corn production, we raised 2 million tons this month based on the latest recently released government data, which suggest higher area, and also exceptional monsoon rainfall, suggesting very good conditions for the Kharif crop, supporting yields. So that 2 million ton increase is based on both higher area and higher yields for India. Global balance sheet, again, put up the back here there as well. Trade, back year trade raised 300,000 tons, higher Argentina exports more than offset lower exports from Brazil. That tightens up ending stocks, therefore also tightens up beginning stocks for the new crop year, coming into new crop year. We talked about production. Just a couple notes on feed use for the new crop year. Higher, so feed use raised this month, higher feed use in India, reflecting the larger crop. Brazil and Turkey, reflecting higher imports by Turkey. Trade, global exports reduced this month. We lowered Brazil's export forecast based on that reduction from last year's crop, so carrying that through into the current crop year. Also reduced South Africa's export forecast based on tighter supplies. And that's the bulk of that. Also worth noting, so that's exports. Imports, China imports, we reduced 2 million tons this month, down to 8 million. That's the lowest since 2019-20, and down from 23 and change. 23 and change last year. So a big reduction in China's imports this year relative to last year. U.S. balance sheet, not much to talk about here. No changes. Kept the price unchanged as well. Global soybean production shows no changes here, but there are a couple things that don't. A few countries that don't show up on this list that are worth noting. Higher production in Ukraine and Mexico offset lower production in South Africa, leaving global production unchanged. Also, just a quick note on Brazil, since that harvest is well underway, roughly probably a little more than 60% harvested at this point. That's 90% or more harvested in Mato Grosso and less than 10% further south you go into Rio Grande do Sul. Soybean supply and use, just few things. Crush raised almost 3 million tons, 2.9 million tons this month. That is higher crush in China and Argentina, reflecting marketings to date, and with a few other changes to the balance sheet. That higher crush just tightens up ending stocks by the same amount, global ending stocks. U.S. soybean balance sheet, again, negligible changes, show up as rounding errors, virtually zero. We did reduce our season average price forecast 15 cents per bushel, reflecting prices to date and, uncertainty about future expectations, maybe some tariff concerns weighing on prices as well. Through January, about 75% of the crop is marketed at $10. Soybean oil, put this in here just to point out a couple important changes we made. Biofuel use, we reduced 150 million soybean oil for biofuel use reduced 150 million pounds, as a little bit weaker than expected biofuel use there, but more than offset by strong export demand for soybean oil. High palm oil prices attracting a lot more U.S. soybean oil into global markets. Cotton, a few things to talk about here. Again, just kind of going through the countries. Relatively small changes in terms of global production, but up overall about 500,000 bales. Argentina, that's just a small trimming there based on lower yields given dry conditions that they've been experiencing. China, we raised China's production estimate again. This is a third or fourth month in a row, just reflecting that classings data continues to come in very strong. Excellent weather conditions in Xinjiang this year, and it is just showing based on that data that's coming in, based on classings data that crop was very large and continues to grow as more of that data points in that direction. Pakistan, production down. That mainly reflects strong pace of imports by Pakistan, suggesting that perhaps their domestic production wasn't quite as big as we had expected. Cotton balance sheet, global balance sheet. Consumption up 600,000 bales this month, raised this month. Mainly, so that's mainly higher production in Bangladesh, Pakistan, and Egypt. And, part of that's reflecting just current low prices. That's attracting some purchases there. Trade, global exports, 200,000 bales higher. We raised Brazil's exports, as a matter of fact, 200,000 bales. Looking at it on the import side, China imports, we reduced 500,000 bales, reflecting consistent with the big crop that we're seeing there. And we raised Pakistan's imports 500,000 bales. So the increase in Pakistan perfectly offsets the decrease in imports by China. U.S. cotton balance sheet, again, no changes, but we did lower the season average price, 0.5 cents per pound, just reflecting recent prices. Current prices are now in LDP territory. All right, sugar. Kind of an important month for the sugar balance sheet. This is, let me go through from starting with production. So production up a bit this month, beef production adjusted higher. That's all higher production in Pacific Northwest based on processor reporting. Imports down, come back and talk about that. Domestic deliveries down as well, kind of continuing a trend that we've been seeing, a downward trend in domestic consumption, domestic deliveries. In terms of imports, so again, March is an important month. It's the month where, the final month where US needs are used to calculate Mexico's export limit to the US. So the way the formula works, as you know, so March, the final export limit for Mexico equals the higher of the export limit based in March, based on a 13.5% stocks to use ratio, or the previous export limit, which in this case is the December limit. So given where we are, Mexico is guaranteed this much access, and that leaves us with a 15% stocks to use ratio. So we are reverting back to the December export limit, which is 80% of US needs. And that leaves us with this month in March, a 15% stocks to use ratio instead of 13.5. So sugar policy is complicated. So, and all right, so that's US. So quickly on Mexico, no change in our production forecast, sugar production forecast for Mexico. Imports raised. That's based on some FAS post reporting. Domestic use down a bit. That's also based on FAS post reporting. Exports are residually determined based on targeted ending stocks, and in this case, that 100,000 metric ton export increase this month from Mexico would all go to third countries, non-US. All right, let's move into livestock and dairy. Going species by species. So beef production raised this month, 120 million pounds. We're basically reflecting higher weights, more than offsetting slightly lower slaughter volume. Pork production down a bit, similar, slower slaughter pace, but in this case, that more than offsets higher weights for pork. Worth noting, and Patrick mentioned this, that we do have a hogs and pigs report coming out at the end of the month, so we'll be able to true up our pork forecasts based on that. Broilers and turkey, adjustments there based on hatchery data. Kind of opposite stories. Broiler production up based on hatchery data, reflecting really good returns on the broiler side. Down for turkey production, reflecting consistently poor returns there. Prices, adjusted our steer price, lowered it $1.25 a hundredweight. That's all in the first half. Just some recent corrections. Price is still strong, but we've seen some recent, wouldn't even call it weakness, but just prices have come down a bit. So we adjusted to reflect that. Hogs and hog price forecast lowered 75 cents per hundredweight. That's all in the second and third quarter, reflecting expectations of relatively weaker demand. Broilers, just truing up to recent data, reduced our forecast. Lower prices in the first and second quarter, continued to remain strong in the second half, and lowered our turkey price forecast a penny a pound, just based on, again, recent data and consistently poor demand. To talk again this month a little bit about eggs. We put this in last month's briefing, and it's still a hot topic, so we'll continue to Give you a little bit of information on it. Still some HPAI. Last large outbreak. So since the February WASDE, the last large outbreak was February 21st. So these new forecasts incorporate that outbreak. So essentially, our forecast assumes reduced production through the third quarter of this year. And then again, assuming no outbreaks beyond that, production would rebound. With tighter U.S. Supplies, we have also increased our import forecast and lowered our export forecast. Most of those imports are coming in for the egg breaking industry. And again, trade, imports and exports account for a relatively small share of total U.S. production. Prices have come down a bit off of their peak, but still very volatile, still historically high. And as you can see, when I put this chart up last month, we were still on the upside of that peak. U.S. meat trade, small adjustments this month. Beef exports raised, reflecting higher supplies, especially in the second half in the U.S. Pork exports lowered 75 million pounds this month. Seeing that we're relatively less competitive in several markets, including China recently. Broiler export forecast also lowered 75 million pounds. Seeing a lot of competition out of Brazil. And our price is relatively high relative to Brazil. And turkey export forecast lowered 25 million pounds just based on lower production here in the U.S. Beef imports, very strong. Raised our import forecast 105 million pounds this month. We saw record imports in January and continued strong demand. High beef prices in the U.S., strong need for that for those beef imports, and mostly coming from Oceania. Let's wrap things up here with dairy, milk supply and demand. Milk production forecast down this month, adjusted lower, 600 million pounds, mostly reflecting a reduction in output per cow. The other thing worth noting, slightly less trade. Our trade forecasts, both imports and exports, pulling back a bit this month. A few things driving that, relatively strong supplies coming out of Oceania. So global market competition, higher domestic use, as you can see there too. So we're using more of the product domestically, raised our domestic use forecasts, offsetting some of those lower exports. On a skim solids basis, the reduction in exports there, that is driven by lower non-fat dry milk exports. And there might also be some trade policy uncertainty behind some of the recent trends as well. In terms of dairy product prices, prices are correcting a bit, but still high, still strong, just off their recent peaks. We could characterize it as adequate supplies, relatively lower export demand, all weighing a bit on prices, but these are still strong prices. Margins are still strong, even with the all milk price down $1 per hundredweight this month and down $1 year over year. Still very strong margins at the farm level, in part reflecting low feed costs. And that is where I will end it. I think I hit all of the high points of the WASDE, the major changes we made this month. Hope you all gathered a little bit of insight from this and found it useful. And for those folks online too, thank you for joining, and we will see you